Well, good afternoon and welcome to the fourth and final webinar in this GTM Global series, kindly sponsored by WorldFirst, around how to reboot your international growth in these challenging post-COVID times. In previous sessions, we've looked at opportunities for online expansion into North America and China, and in our last webinar, we interviewed the founder and current managing director of WorldFirst on their insights to help scale-ups internationalize. Current theme throughout all these sessions has not simply been winning business internationally, but how to sustain and grow it. And pivotal to all of this is funding and cash flow. So today, let's follow the money. This webinar is going to be broken down into three parts. Firstly, we're going to look at the UK scene and what support is available from government bodies, with David Golding from Innovate UK and Charlotte Thompson at the Knowledge Transfer Network. We'll then ask what options are available from the investment communities in the UK with Richard Blakesley at Capital Pilot, and then what alternative forms of funding and cash management are available with Sandy Finlay at ABGI and Alistair Hudson at WorldFirst. For the second part of the session, we're then going to look at what options are available across the pond, and we're going to talk to two key investment communities, one on the East Coast in Washington, DC, and the other on the West Coast in Phoenix, Arizona, with Jan Mull at Fairfax County Economic Development Authority in DC, and Lee Bolel at Greyhawk Capital, and Stephan Frieser at Greater Phoenix Economic Council in Arizona. And steering us through these waters and making sense of what is happening on both sides of the pond is our guru, Ian Tracy. Ian is ex-head of access to funding at the Knowledge Transfer Network, and now is the co-founder of Anchored In. We'll then conclude the session looking at what any company who seriously wants to find and raise money will need to enable that to happen. And we're going to have some mission-critical compliance experts giving us the lowdown on the US regulatory requirements in the shape of James Kaufman at Howard Kennedy in London and Thomas Torelli at Torelli Associates in Chicago. And clearly managing any new investment and funding from a tax perspective will be key too. And to help us make sense here, we have Colin Stansbury in Brighton at Avalara and Antoine Guillard in Chicago from IMS. And then threading all these elements together to ensure your business has the right operational support to enable that capital growth is Roddy Cameron from GTM Global. And Roddy, as with Ian Tracy, will also be happy to, if you have some text chat questions, please do funnel them through on text chat. Finally, before I hand over to Ian, I just want to say that this webinar, we hope, is the start of a conversation, not an endpoint. GTM is planning to run a special 4-hour securing funding and investment workshop virtually at the beginning of September with the same experts, where we'll invite an interested and resident delegate companies to attend special mentor session to help you secure funding and investment to enable an international growth for Q4 2020 and Q1 2021. So without further ado, it's my great pleasure to introduce Ian Tracy from Anchored In, who will now chair, contextualize, moderate and run the sessions on options for UK and US funding for us now. Ian, over to you.
Thank you, Mark. What a wonderful introduction. I just have to hope I live up to it now. And I think I'm going to start off by reminding us of that great quote from Bernard Shaw that the UK and US are divided by a common language. And I think that's the same in the investment landscape. Sure, we use the same terms, angel investing, Series A, B, C, risk capital, but are the expectations the same? I think if I was to cliche or paraphrase my expectations of the US market, I think it's true to say that money will not be the reason that your growth is slowed. They are much more tolerant to risk, but at the same time not tolerant to bad management, and they're much quicker to act perhaps than the British investors. I would argue that the UK tends to be more sceptical and tends to give you less money during the journey, especially in the early days, but perhaps they might be more forgiving along the journey. And like all journeys, having an understanding of what lies ahead helps you both to prepare and perhaps give you the stamina to complete. And as has been said before, only a fool learns from their own mistakes. Wise people learn from others. Today we have some great panelists who are going to share their scars and their lessons. And then, as Mark said, we've got a 4-hour virtual workshop in September where we want to go into this in a lot more depth for the ambitious investment-ready businesses amongst you. And then after that, we'll be making some fantastic targeted introductions to suitable investors. So let's start off this journey by first of all speaking to David from Innovate UK. There is a lot of active UK government support, both from the national government as well as the devolved regions. And so David, my first question is for you. Please tell me the support that a company can expect in the UK if they're an ambitious, tech-centric company.
Many thanks, Ian, and good afternoon and good morning to those in the States. So Innovate UK's national innovation agency, so focusing very much around supporting UK businesses through R&D and innovation, excuse me, and helping those businesses to grow and scale both in the UK and globally. And I think what we're certainly seeing at the moment is that the UK is very good at producing startups. Perhaps along the same lines as the US, but actually getting those companies to grow and scale is a bit more of a challenge. And increasingly, we're looking at how we do that not only in the UK but globally. And so for Innovate UK, I suppose we're best known for providing grants and loans funding, and these are generally for single companies from £50,000 upwards. And we just supported, in response to COVID, about 900 companies, each receiving up to £50,000 for that. And that's been going through, over the recent weeks, right through to some of the large collaborative projects. So bringing together businesses and universities and research organisations to undertake what are generally longer-term R&D projects. So things which might take 2 to 3 years to really do the research project, and then you're looking at 2 or 3 years perhaps then to actually get to the market. So really what we're looking at is using our funding to de-risk the level of funding that companies are putting in, recognising that some of the things we're looking at are much more high-risk type projects. As well as the funding, then we also have a wider suite of support, such as our catapult centres in areas such as high value manufacturing and digital, our innovation and growth advisory support from the Enterprise Europe network, where we've got over 250 advisors on the ground working directly with businesses around some of their challenges, including finding international partners. And we also got the Knowledge Transfer Network, and I'm pleased to say that Charlotte from Knowledge Transfer Network is here today, so I won't say any more about KTN and let Charlotte talk about that.
Thank you, David. And correct me if I'm wrong, but I believe it was said that when the industrial strategy came out, was it 4 or 5 years ago, that was the biggest increase in government innovation spending since World War II. And I'm hearing now that that's paling into insignificance towards the amount of support that Innovate UK has been pushing into our innovative companies since the start of COVID.
Yeah, very much. I mean, we, as COVID broke out, then there was an increase in £750 million going into support companies. We recognised that a lot of them actually had quite severe cash flow issues in some places. And we wanted people to actually continue their R&D and innovation. So part of what we've been doing is putting funding in place to enable both the companies who already have Innovate UK support to continue their projects. And I'm pleased to say a lot of that is continuing. But also, as I mentioned, the competitions we've been launching to get more funding into companies to make sure that they are continuing to do their R&D and innovation, because that's what we see is, it really is a key part of the UK economic scene going forwards. And if we don't have companies doing R&D and innovation, then actually the economy won't be as strong. So it's a really important part of what we're doing currently.
And of course, as well as the Innovate UK money, there is significant money from the devolved governments of Scotland, Wales and Northern Ireland that shouldn't be forgotten.
It certainly shouldn't, Ian. And I think we work very closely with all of the devolved administrations, and have a very strong relationship. And picking up on what you were saying just now, the UK government last week launched an R&D roadmap, and so that is very much around putting funding into R&D going forwards, and increasing the amount of R&D that UK, both in terms of government spend but also private sector is spending, and looking at increasing that up to £22 billion a year by 2027. So yeah, a huge investment in science innovation going forward.
Thank you very much. And what I want to do now, David, is I'm going to move to Charlotte and get some thoughts from people who are dealing directly with the companies. So Charlotte, do you want to tell us the sort of activity that you do over at the Knowledge Transfer Network and how that helps innovative growth companies?
Thanks, Ian. So yes, KTN exists to connect innovative companies to new partners and opportunities in order to accelerate the time it takes to take an ambitious idea and turn it into a real-world solution. And from a funding perspective, we seek to blend both public innovation funding, so what David has just been describing there, with private finance, and especially where investment can make a positive societal and environmental change. So what that would look like in practice, so we use our expertise to inform the investment community about making more informed investments. We work with companies through our investment programmes aligned around some of the UK government's core R&D strategies. And then we connect the two with UK innovative companies to investors in the UK and internationally.
And do companies have to pay for the privilege of working with you and your team, Charlotte?
They do not have to pay to work with us, but I think, you know, when we talk about what's free, it's always a long journey to raising funding. So there's no monetary fee, but it is hard work.
And you expect to hear their successes afterwards, don't you? So that you're expected to be with them, but you're expected to know what happens post your help as well as during the journey, don't you?
Yeah, apart from the fact that it's absolutely lovely to hear, also be able to justify the work that we do.
That's kind of helping, or else David will start getting grumpy, wondering where his millions have gone.
Exactly.
So, thank you, Charlotte. And now I'm moving over to the private sector, and I'd like to bring in Richard, who is going to tell us a little bit about what he does and the trends that he's seeing in private investment. So, Richard, are you ready to take your minutes at the mic?
Ready and willing, Ian, yes.
That was it. So, Richard, what trends are you seeing, and what can you share with us today?
So I think the first thing is that there's a lot going on in the UK market right now, which is pandemic focused. And I think there's this expectation, probably misplaced, that things are actually going to change significantly over the next couple of months. And unfortunately, that's probably not the case, because as is becoming more apparent, things are probably getting worse economically rather than better. So your average investor, going back to your comments about perhaps a slightly greater degree of reduced risk tolerance in the UK versus US, I think we'll see people sitting on their hands for some time to come. Not all investors have to invest. Some do, because they've got funds with time limits on them. Others don't. They can afford to sit and wait. So I think we'll see continuing focus on supporting the existing portfolios of people who've got investments. And I think we'll see some vulture activity as well, where investors can take advantage of companies that really, really need money. And there'll be, as is already documented in a recent report by Bowhurst on the first half of this year, significantly more down rounds in early stage investment, startup and scale up investment in the UK. So overall volumes, I don't think we're going to see a bounce back in investment volumes in early stage equity. I do think there are going to be some hotspots obviously going forward, and they're in the obvious places around those areas that have benefited from and are likely to benefit from going forward, the lockdown and associated issues. I really, really hope though that this is an opportunity for the whole landscape to be reimagined, because the funding landscape itself, the private investment landscape itself, is not fit for purpose. It's low scale and a waste of time for far too many founders. And if there's one thing that we're trying to focus on as Capital Pilot, it's making the funding process an automated production line rather than a cottage industry.
Wow. Okay. So just picking up on that is that what you're trying to express, if I'm understanding you rightly, is you're trying to make sure that the right companies get the money they need quicker and easier, rather than those endless chats of hopeful optimism that doesn't take you anywhere. Would that be an unfair summary?
Absolutely right. And this is extraordinary in an industry which focuses on supporting innovation, that its own processes are so uninnovative, because we're dealing with a data problem. That matching process is a data problem, and it's got data solutions. So quality measurement and best fit between investee and investor are data problems which can be solved using data.
That's going to be interesting, and it's going to be interesting seeing if we pick that up with the investors later on today. What I want to do now is move over to Sandy. So if you were hearing from Richard the problem and difficulty perhaps of getting hold of investment money, I'm going to bounce over to Sandy, who's going to talk about R&D tax credits, which has the beautiful upside that if you're eligible, you get it. You don't need to persuade somebody that you're worthy. So Sandy, would you like to come in now and explain to us a little bit more about R&D tax credits and other tax incentives and how they help the cash flow of our ambitious companies?
Yeah, thanks very much, Ian. Good morning and good afternoon, everybody. I was asked to touch briefly on how, as an organisation, we are an innovation funding specialist. So we work across grants, tax incentives, and commercial funding. And I was asked to briefly touch upon how we identify the most appropriate sources of funding for clients. And I think for us, that starts with a couple of simple questions at their start. So most clients come to us looking for R&D tax relief or looking for a grant. And we try and take a step back from that and ask them a few simple questions around how much money they need, how long they need it for, what are they going to do with the money? Because if we can answer those three questions, it makes it then much easier for us to find the most appropriate sources. Grants, a lot of the companies we work with tend to look for grants first of all because they don't have the burden of repaying. But unfortunately, grants tend to be a bit less flexible in terms of the criteria the companies have to meet, the timing of the grant. If it's appropriate, we'll introduce commercial sources of funding because we can generally make them happen quicker. They do have the burden of being repaid, but they also have more flexibility in terms of how they can be applied. So very often when we look at our company's project, what we're looking at is maybe a very near to market product development into commercialization. And we can often find sources of funding from a commercial source that make that happen and make it happen much more quickly or easily than grant funding. In terms of tax relief, one of the things we have to keep in mind is that most tax reliefs and incentives tend to be retrospective. So they happen after the event, whether that's R&D tax relief, capital allowances, patent box. You usually get the relief at least a year, sometimes 2 years after you've spent the money. So most of the companies who come to us, they're not going to fund their innovation or their market development through tax reliefs. That's almost a bonus or a bit of icing on the cake. In terms of the reliefs themselves, in the UK, most SMEs in the UK will expect to receive somewhere in the region of 25 to 33% relief on every pound they spend. 25% if they're in profit-making situation. If they're loss-making, they'll get a 33% cash credit. And again, larger companies in the UK will generally benefit from about 9.7% benefit, whether that's a tax relief when they're in profit or cash credit when they're in a loss-making position. I was also asked to touch briefly on patent box and the potential tax benefits from patent box. The interesting thing is that everybody looks at R&D tax relief as the most attractive relief in terms of innovation and spend. The reality is that patent box, which is available to companies, it's a preferential tax rate of 10% on all profits directly associated with the commercialization of patented technology. That relief's available over the life of the patent. So for some of our companies, they may have 15 to 18 years of commercialization on which they can receive that preferential tax rate. The profits don't have to be made in the UK, they have to be accounted for in the UK. So they register their patent in the UK or the European Patent Office. They then take the product internationally. All of the profits which are repatriated back into the UK will attract that 10% tax rate. So in reality, for companies that are IP rich and are looking to commercialize on those patents that they have in their portfolio, Patent Box actually provides a much longer and more attractive tax benefit. The reality is, though, that for most companies, if they're not already claiming, R&D tax relief can present a bit of a windfall because they're allowed to claim up to 2 years retrospectively. So we often come across a lot of companies who have not previously claimed. We can compress 2 years claims into one, and they get what looks like a significant injection back into the business, often at a point when they're starting to run out of money or be short on funds, Ian.
And on the Patent Box, how much of your product IP has to be covered by the patent relative to the amount of profit that it shelters?
Well, there is a formula in place. The amount of relief you will receive is directly proportionate to the value that the patent adds back into the finished product. In reality, if a product receives a large amount of benefit from a brand rather than the patent, that artificially discounts the amount of benefit they'll get out of Patent Box. But if the particular patented technology can be shown to have a significant impact on the performance of the finished product, then companies can expect to receive preferential tax rate on 100% of the Patent Box profit.
Fantastic. So that certainly is worth exploring. And so now I'd like to move from Sandy over to Alistair, who is going to be covering off international payments and how he can help them become easy to do and manage, etc. So Alistair.
Thanks, Ian. So yeah, just on the currency side of things, any sort of expansion is going to have a massive list of things to sort out. The currency side of things can often get overlooked, but in terms of where WorldFirst is coming over the last sort of 15, 16 years, it's very similar to a mortgage broker. We don't do anything different to what the banks offer, but as a specialist, we are able to give clients access to preferential rates. And the pricing of international payments across the UK it's very, very murky. So if you were to type in GBP USD onto Google and have a look at something like Yahoo Finance, you'll see what is effectively the market rate, which moves twice a second all throughout the week. If you were then to call your bank and ask them for an exchange rate, they will take that market rate and they will minus a percentage spread to then determine your exchange rate. Now that percentage spread could range anywhere from 0.5% to maybe 5%, depending on the volume that you're transferring. But it's very difficult to determine how much you're paying on a consistent basis for these payments. So WorldFirst, we have a very simple tiered system. It starts at 0.15% away from the market, then moves on to 0.25, and then the largest bracket is 0.5% away from the market. So in terms of managing the payments, that's one element. There's a really crucial piece as well of course, managing currency risk. So for businesses starting out in the US, you've obviously got to determine where the profits need to be returned at some point in time. Now, between here and the end of the year, there are some major risk events to hurdle, obviously the US elections being one of them. We saw the Financial Times report yesterday that they're under the impression that the US-UK trade deal talks are going to be put on ice until after the November election, which gave sterling a bit of a kicking lower. So there's plenty of risk events in the market, and to not have a currency specialist side by side to digest and understand news, it can leave you exposed. So if your profits are coming in or your revenues coming in dollars in America and you're repatriating it back to the UK on a regular basis, as the market moves with you, you are then exposed to that movement. So if you're operating at a 5% profit margin, for example, and GBP USD moves 15% across the space of 12 months, there's a 10% problem effectively on the bottom line. So our job is to really kind of cut through that noise and understand where the risks are and try and effectively hedge against that.
I'm sure there's been many a fun moment when you're watching the news and you're trying to second guess what's going to happen when you go in the morning. So thank you, Alistair. We've now heard all our UK panelists. I'd like now to go across the water and start speaking to our American panelists. And the first person I'm going to be speaking to is Jan. And I want to understand, Jan, what sectors do you work with, and tell me a little bit more about yourself.
Well, thank you, Ian. Hope everybody can hear me okay. Good afternoon, good morning. My name is Jan Mul, and I'm working for the Fairfax County Economic Development Authority. To put things a little bit geographically in perspective, Fairfax County is part of the Northern Virginia region, which in itself is part of the DMV, an acronym I don't like at all, but it stands for Washington, D.C., Maryland, and Virginia, also known as the Mid-Atlantic region. It's a little bit of a pity that I cannot invite you to come over here and visit, so we need to do this through Zoom and hopefully explain that our region is very tech rich, and hopefully that is appealing for the companies who are listening here today, specifically cybersecurity, aerospace, defense, and most recently very much also healthcare. A little bit of a recent plug here for the region. There was a report about the Northern Virginia, the whole area here. The tech ecosystem had proved pretty resilient against the headwinds of COVID-19. Most recently, we made a big announcement on Amazon Web Services, Facebook, Google, and Microsoft in big R&D center here in Northern Virginia. Also, before I go into the financing thing, I would like to mention that a new research from CBRE ranks the Washington, D.C. region as the #2 best tech talent market in North America. I mean, I think that's second after your financing. You need to have good people as well. On the investment and financing side, very strong VC community here in D.C., not as strong as Silicon Valley and the Bay Area, but I think we are pretty prominent. We had a couple of really good quarters here. According to a pitch book, a National Venture Capital Association, we raised in the first quarter $848 million. Sorry, the second quarter. The first quarter was $699. So I think very robust numbers in life sciences, biotech, and cybersecurity startups. I think so. That's pretty prominent. Just in a moment, I will put in the chat box what we call a capital attraction fact sheet. A couple of organizations I would like to highlight for the next round for companies who are interested in hear more. There is an organization called Connectpreneur. It's basically an investor network, invitation only for about 50 proven angel investor, capital investors, but they have a global footprint. They're organizing now basically every month Zoom calls for basically participants from around the world. Another organization I would like to mention is the Mid-Atlantic Venture Association. It's also in the fact books. And I would like to mention that we are very engaged in initiatives when it comes to smart city. As of yesterday, we had a smart city accelerator event talking about what the region is doing. And also the cohort currently was presenting how they were looking for financing. That looked very promising. And I'd like to conclude by basically saying that what we see as a post-COVID-19, because everybody realized we cannot travel at the moment, but we see, particularly for this region on the East Coast, we see enormous new business opportunities in e-commerce, unmanned transportation, energy, and then the traditional already AI, robotics, and of course in healthcare. So I think let me conclude right there, and hopefully that gives a first overview.
Thank you. And I'm looking forward to the fact sheet that you're now going to put in the chat window, you said.
I'm going to do that as we speak, Ian.
And does it have your contact details in there? Because I'm sure some people would love to hear about those investor networks you mentioned.
And I will put the contact information in the chat box as well. And of course, they can go back to Mark if they want to have further information. Thank you for the opportunity.
No worries, Jan. And now we're moving over to Phoenix, which I believe is on the West Coast. And where Stephan is going to tell us a few facts and interesting comments over from where he is. So, Stephan, the floor is yours.
Thank you, Ian. So my name is Stephan Frigia. I'm Senior Vice President of Strategy for the Greater Phoenix Economic Council, GPEC for short, with the regional economic development for the entire metro region of Phoenix, Arizona. It's about a little short of 5 million people in the region. We're adding about 100,000 per year. So one of the fastest regions in the US in terms of population growth. and we sit in the Southwest. We're next to California, and combined, in the Southwest, we basically have about a 40 million customer reach for all kinds of technology and products. Our core strengths is advanced technologies. We do deal a lot with high tech, semiconductors, aerospace. So there's a lot of engineering capacity here and expertise on those particular initiatives. What we do, we help companies navigate the system, navigate all the local stakeholders. Whether it's a startup looking for support, whether it's capital advising, all the way to Fortune companies that are looking for expansion in the west of US. To kind of facilitate international company looking to come over, a few years back, we actually developed a program called the Global Growth Accelerator in partnership with the Arizona State University. This particularly designed to help international firms accelerate the US growth plans by providing a low risk, expert guided, self-funding platform to business in the US. By participating in this program, most companies have access to ASU student body, which counts 75,000 more, but also allows us to connect them also with their city partners that are members of GPAC, which is about 22 of them. We have a lot of initiatives covering a lot of different sectors that companies in multiple growth stages can take advantage of. I'll just list a few, but obviously for any of those things that I'll mention next, I'll welcome you to one-on-one conversations, and please reach out to Mark, to help kind of coordinate and get into details. But for example, Smart City, we organize the entire region in a formula that allows all the cities to adopt the same type of technology through called the Connective. This is led by private sector partners, including Dell, Sprint, and Cox Utilities. Very interested in smart city technologies. With the help of the state, we launched the WorkTech, so wearable technology, medical devices, robotics. So if any of you in the audience, want to learn about that, please reach out. We have a twin initiative also in blockchain, also state sponsored, in partnership with the university. Again, we have a sandbox for fintech model after the UK one, which now has 8 or 9 companies already in the systems. I believe 1 or 2 are from the UK itself. We also very active in prop tech, with another sandbox as well, to help company validate the technology before they go to full market. The state also runs an innovation challenge, twice a year. There's about $1.5 million on the line, in grants. Anyone can apply, even from the UK, you can participate. Obviously, if you make it to the final rounds, we want companies to actually expand here in Arizona. So there might be some string attached that we can talk it through as well. As an area opportunity, that was raised by COVID, a lot of money now is sloshing around EdTech, especially because all our kids are at home. I can assure Mayu are in the other room. And even though I would like them to be in school. So a lot of the cities are not trying to figure out, how to bridge the digital divide. There's a lot of federal money that's flowing to the cities. So I think that it's an area of opportunity that you should pay attention if you play into that particular space. Just as we mentioned earlier that the UK government has stepped in to help innovation and provide some lifelines to cash-strapped companies. I will remind everyone in the audience that subsidiaries of UK companies in the US are US companies, and therefore they're also for the same level of support and protections if you actually have expenses and payroll in the US. I'll just conclude with kind of going back to early comments from Ian at the beginning of the seminar, that the UK and the US markets have similarities but are very, very different in terms of innovations and go-to-markets. So, and it's all about risk and risk management. So our advice, is always to choose your path carefully, but rely on experts, like in these panels, because we can help you lower your risk. There's always risk involved. There's never going to be risk-free. But, through smart assistance and learning from others, we can accelerate your path, and get you to market and revenue faster.
Thank you, Stephan. So sloshing around is a technical financial term that you have. You said there's a load of money sloshing around in EdTech. And if somebody was to go on a mission to the US to explore the opportunities, how long do you think they should allow themselves to visit either yourselves in Phoenix or to go to where Jan is and have a look around there? What would be a sensible amount of time?
I would definitely recommend spending at least 3 to 4 days, and that would basically just enough to shake hands and have introductions. Our global accelerator program actually allows them to stay here cost-free for about 3 months. So we think that to actually put together a comprehensive plan, with partnerships that you can execute on. If you do it well, you should have someone on the ground, or back and forth, for a good period of 3 months. And then you can move on and make some the serious moves in investment to actually execute on that plan. So I would say welcome plan at least a week to talk around but when you're serious, then plan to stay a little bit longer. So
did I understand you correctly saying there's support to help you stay there for up to 3 months to see what's happening?
That's correct, yes.
Wow, and it would be unfair of me not to ask Jan the same question. Jan, do you have a similar scheme over where you are?
Yes, we do, and I wholeheartedly agree with Stephan just said. I think if planning is properly, we're more than happy to help with the companies there. I think 1 week orientation is absolutely, I think, very, very valuable when travel is allowed. And also, I agree with Stephan. We have initiatives here also that in incubators that we do 2-3 months to basically test the waters, develop the business, and then make a more conscious decision on a more permanent presence here in the US.
Wow, I struggle with the thought of being able to see a whole state in a week, but that's why we have people like you and Stephan to help us. So thank you, Stephan, and thanks again, Jan, for coming back in. What I'd like to do now is speak to a VC, and we've got Lieb on the line. So Lieb, would you be kind enough to give us your view?
Yeah, thank you, Ian. Appreciate you having me on today. So Grail Capital, we're a venture capital fund based in Scottsdale, Arizona. We are primarily focused on the United States, and I would say Western United States. We've made international investments in the past. Currently have about 500 million under management, and our focus is working, supporting, and investing in companies that are developing software. So primarily B2B, business-to-business enterprise software as their customers. And these customers and these companies are generally generating about $2 to $6 million in ARR, annual recurring revenue. So these are not idea concept. These are companies that we call growth scale companies, and companies that are they've got a proven product. They've gone through the majority of the R&D, and they're looking to go to that next level. And that's where our growth capital comes in, and we'll focus on different themes and verticals and sectors with the likes of cybersecurity, fintech, enterprise software, just as you can call it, a generic term, healthcare IT as well, which is very strong within our region and in Arizona. But our portfolio is really across the country. We're looking for companies that have a presence in the US. Or are looking to have a presence in the US. So we've actually re-domiciled companies in the past on an international level. So if a company fits within our thesis and with our investment philosophy, and we feel that it's a good opportunity, then we could assist them on the re-domiciling of their company into the US. So we're always looking for good opportunities. Arizona is we're seeing a lot more activity on the venture capital, a lot of innovation happening here, a lot of customer bases here as well for companies to look at. So, we're based in Phoenix, but our region per se is primarily Western United States. We do have on the East Coast as well. So that's a high-level overview of the types of investments that we make and the opportunities that we see.
Thank you. And you must have heard lots of pitches in your time.
Yes.
Right? The good, the bad, and the ugly. If you had to say in 30 seconds, the sort of like, my one big tip, whatever you do, please don't do the following. What would that tip be?
I would say don't make it about yourself. Really talk about the market. Really talk about, you know, a lot of founders, they in their pitches, they talk about themselves a lot, which is obviously an important thing, but talk about the real value. And specifically, if they've had specific successes in the past, highlight that. We want to hear, you know, what is the great value add, and I would say specifically, you know, is the product that they have a nice to have product, or is it a must to have product? And when founders talk to us about the need in the market, and not that it's nice to have in the market, that is obviously a cutting edge in any pitch.
Okay, so you're driving it from where the market's coming from. I'm going to ask a similar, thank you. First of all, folks, thanks for throwing the questions in the chat window. I'm keeping a rough eye on them. I'm going to ask the same question to our British colleagues, and I'm going to ask Richard and Charlotte. What would be their one pitching tip?
Charlotte, do you want to go first, or shall I go? You go.
I was just really surprised by, Lee, what you were saying about founders not presenting themselves, talking about themselves, because actually in the UK I find that actually, especially companies that have not raised investment before, aren't talking about themselves enough. Like, what's the why are you really going to deliver on this? So really interesting to see that kind of UK US difference, because more often than not, that's what I'm trying to work on, the personal ambitions of the founder. So I'm going to counter that with, as a UK company, to show off a little bit more.
Because I know, Charlotte, a lot of the companies I've seen, sorry Richard, you'll be there next, is they seem to try and dazzle us with the technology, don't they? And they try to convince us that they've got the bestest widget. Don't ask about my ability to deliver. Don't ask about the market size. Just trust me, the widget's amazing. So, Richard, have you got a point to add to that, or have I just stolen your thunder inadvertently?
No, I'm going to try and pretend you haven't, Ian, by saying that actually these all line up, because I think perhaps what Lee is referring to is the idea that I'm desperate to sell the thing that I've got, rather than the opportunity that creates for the users of that thing, and therefore obviously for the investor at the end of the day. So it's about audience. And I think the key thing is make sure you understand your audience, not just generically, this is an investor, I need to speak the investor's language and deliver to them what they need to hear, but also the specific person that you're speaking to at the specific investment firm. You know, do your research and figure out what their hotspots are.
Okay.
I agree with that 100%, Richard, and I think Charlotte, I hear, you know, there's definitely this interesting, different dynamic, and as you can hear from my accent, I'm not from Phoenix, I'm actually from Newcastle, so I'm a born Geordie, and understand there's a little bit of, you know, this different dynamic. But Richard, I think 100% you're right, and I think one of the key points is that when a company is pitching, one of the most crucial points that I've seen in terms of successes and failures in pitches is these founders doing research in who are they talking to, right? What are their focuses, and understanding maybe even on a personal level, if there's colleagues that know the people that they're talking to, what are the points that, you know, the investors want to be able to hear and are really looking for. So I think there is this dynamic of balancing that, and I encourage, you know, I've heard company presentations from anywhere from hydroponics, which is not something we would ever look at, to obviously things that are core. So just because someone has a title of venture capital or or investor, know where their sweet spots are, and I think this is a fundamental early stage mistake that founders make, is find out who within the industry is applicable for investments. And obviously we're a little bit further along the line, and we expect that when companies come to us, they've done their diligence and they understand where our sweet spots are. And just to put numbers on it, to amplify what I've just mentioned, we see about 600 companies a year. That's on average. Of that, I would say 60% of that is not even relevant, does not fit within our core, focus on investment. We make about 2 to 4 investments a year, and so if you take that in proportion, it's really a nominal amount. But I would say, going back to Richard and Charlotte, I think there is this balancing part, but fundamentally, know who the investor is, do some research beforehand, see prior investments that these companies, that these venture capitalists have made, and see whether you fit into that. And that's part of that story of, being able to tailor that pitch to that, to that investor.
And to build on that, I always encourage companies they have the right, and I would say the expectation, to do due diligence on the VC and ask the VC, introduce me to some of the companies that you've invested in, because I want the CEO to tell me what you're like, how much value do you add to the board meeting, and that sort of stuff. Don't be afraid. And I think the other thing I would add is, don't be afraid to ask and find out if that investor still has money to invest. Many of us know investors operate on, say, 10-year funds, and if you've caught them on the wrong year, then they're not going to be investing because they've either invested or they're waiting. I'm going to put David now on the spot. We heard some fantastic information from the regional support, if I can call the states regional, about how they help people when they come over. So David, what is the UK support if we have somebody from, say, America coming over to the UK trying to explore the nation, seeing where they want to relocate?
Yeah, I think so. I mean, in terms of Innovate UK, then we're the same in that a UK company for us is anyone who's based in the UK, irrespective if it's a US company, Canadian company from Singapore. So we're all of the support from Innovate UK is there for those types of companies. And then obviously there's people like the Department for International Trade who are looking at inward investment and helping those companies. And equally, a range of different organisations working across the UK. London Partners in London, for instance, helping companies look at not just the ways of setting up businesses, but also the types of funding that's available, whether nationally from organisations like Innovate or locally. So I think there's a whole range of different funding available, whether it's from the public or private sector. And I think what we've got is in some ways quite an open system where it's relatively easy to set up a company, and then you can access a lot of the support from the government, which I think some of it's a little bit hidden, but with the likes of Innovate and Knowledge Transfer Network and Enterprise Europe Network, we can help people navigate the system. So,
and don't you think there's a lot of strength to be had if you had a conversation with one of the catapults, if you fit in their technical sectors, and if you wanted a particular geography? Of course, the European Enterprise Network gives you that geographical thing. I know we had a question coming in about Delaware, and I think people might want to know that I think it costs something like £50 total to create a company in the UK. And it's about half an hour on the Companies House website, and then you've got a legal entity that you can trade through. I mean, I think for most places, we're one of the lightest touch places going, aren't we? So that's something for people to think about.
Yeah, very much so.
Yep. So I'm going to thank my panelists very much. I'm now going to hand the microphone over to Mark, who is going to carry on with the second part of today. So thank you, panelists. You've been really helpful and informative. Thank you very much.
Ian, thank you so much, and thank you for the team. And please do, team, stay on, because we're actually normally for a webinar like this we overshoot, but we're through Ian's meticulous chairmanship, we are absolutely on time, and I think we're rocking. So just thanks again, Ian, for a really fantastically well moderated gig. I want to, if I can now, bring in a friend and colleague who's going to run the second half or the second part of this webinar, Roddy Cameron. Roddy, can I ask you to introduce yourself and take the torch forward?
So thanks, Mark. Good morning, everyone, or good afternoon. Roderick Cameron, work with Mark at Go-to-Market Global. And I'm going to take you through the second section. I think we're aware that the exciting bit is finding the money. So whether that's through investment or smarter management of your cash, what turns that money into sales and revenue requires infrastructure. So the next section covers the vital topics of getting your legal position right on both sides of the Atlantic, and making sure you manage your tax and your accounting position carefully as you navigate into a new regulatory landscape. Now, recognizing that getting compliance issues wrong can compromise your entire business is tricky enough. But there's another aspect to expand internationally, and that's the stretch caused on management resources. Anthony Fletcher, who's Chief Executive of Grays, who've got a huge US business now, is quoting this brilliant book, Upscale, which I'll put in the chat. It's a Tech Nation compilation from scaling businesses, funders, and CEOs. He said that what many founders find as soon as they internationalize their business, especially if they start opening extra offices, is that the complexity goes up dramatically. And this requires a different set of skills to handle new and different processes across vision, culture, and working together. So we know that many of you are going to face a period of executive stretch while you work out whether it's the right time to invest in the next senior hire. The bad news is that a 2015 Leadership IQ study showed that 46% of hires, both execs and non-execs, are considered failures by the time they reach the 18-month mark. So all businesses have to constantly face the repercussions of poor hires, but it's a particular issue for scaling firms. So to crack that problem for scaling up tech companies looking to internationalize, at GTM we've teamed up with Boardroom Advisors to offer access to their pool of international growth directors on a fractional basis. That's a flat day rate, no hiring fee, rolling 30-day commitment. So we believe that by working with a temporary executive on a day rate, that can allow your business to build its capability and access expertise while keeping your options open as to when the right time is to commit to that permanent hire. For more details on that, please see the fractional executive page on go-to-market.global or at boardroomadvisors.co.uk. Now, turning to some of the issues that such a fractional executive would doubtless help steer you through, we have a series of experts to address the legal, taxation, and accounting issues you may face. So first up is James Kaufman, a partner at Howard Kennedy. He's also been on the client side as general counsel and chief operating officer of an alternative investment fund. So James, from an English law perspective, could you lead us through what are some of the pitfalls and opportunities firms should think about as they look to link their fundraising with US or international expansion?
Well, thank you very much for that, Roddy, and good afternoon, good morning to everyone. We know, and I know from experience, that raising funds, whether inside or outside the UK, raises a range of issues, and we frequently work with our clients to address them. And I think probably what's most helpful in a forum like this is just, if you like, to pull out some of the key ones. So, some of the issues, some of the pitfalls that are broadly that we see from businesses seeking investment or seeking growth, really, three big ones. One, are we as a business ready for new investors? Are all our due diligence materials up to date? Have we got all our ducks in a row so that when we actually start going out and we start having these important meetings, not only have we prepared what we're going to be saying, which is what we saw sort of in the first half of this afternoon session, but also have we got everything, all the collateral to back that up? Do we have all our technical and financial data, as well as any forecasting, accurate, verifiable, up to date? Again, it may not be glamorous, but these are the things that are within any business's control to make sure that we have completely sorted before we even go into the room. And can we withstand the scrutiny that we can expect to be under? One of the things that I frequently do with my clients is, if you like, do a mock review or sort of a practice session of these are the kinds of questions that you're going to get asked. How are you going to react to it? Have you been thinking 2 or 3 questions ahead? And also, as you talked about with fractional management, is our management infrastructure robust enough that we can handle having significant amounts of executive leadership time and energy taken up on the road? Now, this doesn't matter really where you are. If you're on the road, you're on the road, and you're not in the office. All the more so if you're going to be out in a different jurisdiction. But also, how are we going to respond, and how are we going to demonstrate when the investors ask the question, okay, you're on the road, who's running the show? How's that all going to work? And the skill here, of course, is ensuring that our businesses have the correct answers to the questions, but also have the right way of presenting it. And then we also know there are going to be some questions that are going to be jurisdiction specific. So you know, if we look more closely at a specific jurisdiction where we're going to be going, do we understand the market we're seeking to enter? Do we have a clear idea based on the evidence how our proposals are going to be received right at the start? I think it was Ian that mentioned the sharing a common language, but divided by the way in which different terms are used. You know, do we understand how these terms are going to be used? Do we understand how one commonly addresses each other in a meeting? You know, are we prepared for the inevitable question about Brexit? We know it's going to come up. It might not be the world's most exciting question, but what's our standard answer for that? And then have we got a corporate structure that works, not just for us, but also that works for our investors? Do we know what the investors' requirements are going to be? You know, for instance, a typical thing, I'm not going to steal the tax thunder here, but making sure that it's tax transparent for US investors as opposed to being, you know, non-tax transparent for European investors. And do we understand the unintended consequences of our existing businesses and infrastructures? Because as we try to evolve our business to make sure that it's meeting the needs of any new market or any new investors, actually, what effect is that going to have on what we've currently got in place? And in these kind of situations, I think we're looking at an iterative process. You're not going to get it right first time. Don't expect to. But so long as you know where you're starting and where you want to go, so over time, it'll come along. And then, you know, there are things that are just generally within a business's control. Tax implications, do we understand them? How we're going to raise capital in the jurisdiction? Do we understand the legal implications if we expand into a jurisdiction? Simple things like if we're going to move our business from the UK into the US, what does that mean for our standard terms? What does that mean for our website? What does that mean for, you know, for our group structure? Should we be having a subsidiary in the US? We've already been talking about the questions of setting up a C Corp or something like that. Or do we actually go from having a UK, just purely a UK company, do we have a global holding company in a jurisdiction that works for everyone? And then we have subsidiaries flying up down underneath it. Again, not question.
Super. Oh.
I'll be muted. I'll stop here, but suffice to say, there's a lot to talk about, but it's really good to lay the groundwork before you go out, so you can come out prepared.
I think that's enormously useful advice, James. Is if you've got that relationship with your lawyers, they understand your business before the heat is on. It just makes everything flow much faster, doesn't it? When you're in those tense meeting rooms. Lovely. Thanks very much, James. Next up, we're going to go over to your counterpart in the US. This is Chicago-based Tom Torelli of Torelli Associates. Now, he's helped many firms in the GTM global community with their US market entry. So, Thomas, can you give us a flavour of what British firms get wrong going to the States, and what are the easy things to get right early on? How you help?
Well, nobody ever makes any mistakes when they do business in the United States, Roddy. Thank you very much. And thank you to Mark for inviting me to participate today. Torelli Associates is a small 5-lawyer firm located in Chicago. We've been working with small to medium-sized UK companies doing business in the US for 35 years or so. That makes me an old man, but maybe somebody who has some experience that could be of relevance to you. We work closely with GTM, of course, and also with the Department of International Trade that was kind enough to introduce us to GTM. What we do is we try to work with our clients in a preventive capacity. And if I can give you one thing that you walk away from today is that get a lawyer in the United States that is loyal 100% to you before you do much of anything else. Your investors in the US, someone used the term vultures, not an entirely inappropriate. They know what they're doing. They know how to protect themselves. Do not put your future in the hands of a friendly VC who's going to prepare the investment entry documentation. That's got to be your responsibility. As James, I echo what James says, you've got to have your house in order before you start talking to VCs. And in the United States too, you can't come here blue-eyed and bushy-tailed and hope to be successful. What we generally do to start with is work with our clients on their intellectual property. What IP do you have? Is it protected outside of the United States? First of all, then let's get to it in the US if you haven't done it already. patents, trademarks. Yeah, I don't know how many of you have not registered your trademarks in the UK. Get James on the phone when this seminar ends if you have not registered your trademark in the UK. We'd be delighted to help you ensure trademark registration in the United States. Trademarks speak volumes for companies. It's their reputation that rides with their trademark, and having your ducks in a row from a legal standpoint will create a very good impression on potential U.S. investors. Intellectual property. Then, of course, organizing a company. Easy to do. You can do it with Stripe Atlas for a few $100s. I wouldn't do that if I were you. Well, first of all, because I'm a lawyer and I make money setting up companies. But more importantly, you want to show your prospective investors in the United States that you've gone about it in a very serious way, and saving a few £100 and having the job done about 2/3 of the way by Stripe Atlas is not the way to create a good impression on your prospective investment partners in the U.S. You've got a choice between a Delaware limited liability company or a C corporation. Most of you may think, limited liability company sounds like a UK limited, so it must be the right thing to set up. And if you talk to 10 lawyers, 9 of them will tell you, yeah, LLC, that's perfect. There's a 10th lawyer that would disagree, and that happens to be me. And why? Well, you set up an LLC, a limited liability company. It has pass-through of all tax aspects, which would make the owners of the LLC responsible to file tax returns in the United States. And if you're in England and you own part of an LLC in the United States, you're going to end up having to file tax returns in the United States. There's a way to structure this to make everybody happy. I don't want to get into the details of that right now. That's not what we're here for. Obviously, the entry into your business by the venture capitalist is the crucial document that protects your interests and control in the long term. Subscription agreements, shareholders agreements. If someone comes in with a boatload of money, these have got to be prepared, and there are no standard forms in the United States that one size fits all. You've got to adapt your documentation to your specific situation. Immigration is a real issue. Obviously, the borders are closed at the moment. The current administration, I think, has made their opinion very clear as to their view about immigration, perhaps somewhat different with Great Britain. I do not know. I'm not sure anybody knows. It could very well be that any trade deals are being suspended, as someone mentioned a little earlier, until after the election. But in all events, if the founders are interested and planning on moving to the United States to run the business in the U.S., that needs to be planned starting now. Suffice it to say that it is your U.S. company that will be the key sponsor of a visa for you to come and live and work in the United States. You don't seek the visa yourself. Your UK company can try to seek the visa, but it's going to have a very difficult time if there's no U.S. structure to receive you when you come to the United States. So that's what requires a lot of planning. I've participated in lots of these types of conferences, and one of the things that a serial entrepreneur said that really sat with me was, if you want to be successful long-term in the United States, one of the founders should probably go to the United States. Roddy, have I used up my time?
That's perfect, Tom. Lots to chew over there, both in terms of just thinking through the structure more carefully, but those issues around immigration, very much a movable feast. And with both of those, just that added complexity just means get it sorted early.
Yes, absolutely. Absolutely. Happy to have those offline conversations with participants if they'd like, up to 1 hour for free. Hard to say for a lawyer.
I know that hurts you, Tom. Brilliant. Thank you very much for your contribution today. Really enjoyed that. Thank you. Now we can turn to the thorny issue of sales taxes and VAT management. We've got Colin Stansbury's, I think, with us from Brighton. Avalara is the Seattle headquartered business he represents. Colin, can you talk us through how Avalara can help us navigate through the increased liabilities of VAT and sales tax and manage the cash flow as we do that?
Absolutely. Hello, everybody. My name is Colin, the tax guy. I'm an alliance manager here at Avalara Europe, and I am very grateful to Mark, Roddy, and Luna, the whole team, for inviting Avalara up here today. As Roderick was saying, Avalara are an indirect tax automation company. So what we do is we use a mixture of software and solutions to be able to simplify the way that businesses all around the world manage the tax on their international transactions, right? So when it goes to the US, right, it's important for you to think of the states as an individual country connected by an economic union, right? There are multiple different instances of different taxes and different codes and different rates wherever you go, right? So I'm going to throw some numbers at you right now, and I just want everybody here to tell me to slow down in the chat. That's fine. I'll answer any and all questions afterwards. So in the US, there are 45 states that charge some form of sales tax, right? Within those 45 states, there are actually 12,000 different taxing jurisdictions that each have their own different rules and ability to change the rates of tax. Why is it so complicated? Well, the US Constitution allows states the ability to charge taxes to be able to pay for public services like fire departments, police services, hospitals, roads, et cetera, et cetera. So what businesses are doing now is they are using technology in order to ensure that compliance is met, right? So when government is using technology, it needs to be matched with, that's right, more technology, right? So Avalara are able to plug into your ERP, e-commerce, CRM systems, and be able to provide a tax engine with a native integration to be able to simplify the way that you register for tax, calculate tax, file tax, and finally, how you pay tax, right? And the reason why we exist as a company is because unlike corporation tax or income tax, right, where this is compliant over here and this is fraudulent, you know, there's 100 different ways to be able to be compliant in the middle of those two sections, right? But when it comes to indirect tax, there's actually no space between compliant and fraudulent, right? You either do it right or you do it wrong. So what that means is it doesn't add any value to what you are doing as a business, right? So what we're seeing now is what we call the death of the manual process, right? Businesses, as I'm sure everybody on this call is doing, is looking within their business model and going, what task drives value? Where are my employees adding value and adding on to what my company is doing and driving revenue, right? Indirect tax, guarantee you that's not one of those particular issues, right? So I was talking about numbers earlier on. I'm going to pass my time over here in just a second. But what I want everyone to do who's online right now, I want them to take out a piece of paper or a pen or write on your laptop some absolute lines in the sands when it comes to sales tax requirements, right? So if your business is holding any goods in a state, if they have any salespeople working within that state, if they have a brick and mortar store in that state, or if you're doing marketing within that state. Those are 4 big indicators of sales tax requirements, right? But in 2018, they decided to add quite a few more, right? I know, a bit of drama in the tax world, right? So rule of thumb, guys, is if you are selling $100,000 into a state, or 200 separate transactions, so 200 invoices to a state. If you do cross any of those thresholds within a year, then you have a transaction. Then you have what's called transactional nexus, which means that you have a requirement to manage tax in that state, right? So what I want you all to do is take that information. Mark and the team have got my details. If you are close to or thinking about exceeding those thresholds, just get in touch with me and I'll be able to provide free guidance on best practice to be able to help you guys navigate the quagmire that is US sales tax. So Artie, back to you.
Colin, thank you very much indeed. It's the having sort of been through that process of taking a business into the States, the complexity of sales tax just kind of completely overwhelmed me when I was trying to figure that out. So it's not like VAT. It's a whole the quagmire.
Different animal. Oh my God, it's a different animal. It's like walking to Mordor, mate. It's terrible. Don't do it. Don't do it. Get the eagle to help you.
Cheers, Colin. Thanks very much. Let's keep moving on. The last of our speakers today is Antoine Guillaud, whose firm IMS is ostensibly an accountancy practice, but we know you do much more to support firms with their US market entry. Antoine, what are those vital early decisions to make around accountancy and taxes, and what often gets missed or mismanaged?
Hi, Roddy. Thank you so much for having me today. Yeah, and Tom and Colin obviously talked about it, but I mean, truly, when you're thinking about coming into the United States, I mean, you do need to realize then you've got to look into your business model and be ready to adapt it to the US environment. And with regard to tax, I mean, clearly, Colin mentioned it, but yeah, we have 50 states, so 50 states plus federal, that's 51 jurisdiction. And you'd be surprised on how sometimes little you can change and adapt your business model and limit your exposure. I mean, the name of the game, and you see, as Colin mentioned, sales tax is complicated, it's overwhelming. Why don't we just start by trying to limit the number of jurisdictions in which you are exposed? So this strategic thinking about, okay, we're going to the US, we are not dealing with one country system really, but with 51. How do we limit this number of jurisdiction and what change we need to do? For example, yesterday, talking to a British client, they used to leave inventory on consignment. Inventory and consignment, that's going to create a nexus, like physical presence in most of the states where you're going to leave this inventory. Is there any other way to do it? Well, yes, there is. And of course, given the implication of consignment inventory in the US, it's not that common in the US because nobody wants to generate this physical presence everywhere. So there is another way to do it. So there is many adjustments which can be made. So be open to really and do review your business model against the tax consequences, and always do it at the federal and the state level. I mean, that's probably the number one issue. The number two issue, you mentioned it, Roddy, is really HR. I totally agree. How many of our clients, we've been in business for 20 years, we solely work for European corporation, setting up in the US, and I can tell you, including me, came to the US like 30 years ago, set up my business 20 years ago. Every time we hire, the risk of, screwing it up is pretty high. Do work with specialists, and I'm talking there not only recruiting specialists or whatever the system, but with people who are used to work for foreign corporation who can help you bridge this the cultural gap between the UK and the US. There is a big one, and so many, the first hire are typically a catastrophe, and 90% of the time, and just don't fit and have to be replaced. So this is the second really big issue. And in terms of planning, if you are planning to send somebody over, and that's probably key to your success, that needs to be prepared. That's probably the first thing you need to look into. And we'll be happy, of course, to help with all this. Thank you, Roddy.
Super. Thanks, Antoine. That's hugely helpful overview. Just going to have a quick check and see where we are on time. I think we're in relatively good order. Mark, if there's anything picking up from the chat box, do break in and let me know. But I just want to kind of go back to particularly the to James and Tom. That idea about who should be the person to go if you're going into the States or going to different countries. Is the founder the right person? How should firms look to manage that, particularly as it comes up as a manager during fundraising? Is how do you manage that management capacity and manage that to keep those comms going? Do you have a view on that, James? I know that Tom certainly has one.
I'm happy to hear Tom's first. Haha. I don't think it overly. No, let me take a step back. I think it's always good when the founder goes. I think it's always good when the most dynamic person, the person who can tell the story the best and who can represent the journey the best, goes. Of course it is. It's always helpful when the person whose name over the door is the one who's sitting over the desk. But it comes with the big caveat that only flies if by going the business isn't being put in jeopardy by the founder not being there. Personally, I think the founder always goes. I think that part of the mark of looking to be successful is that they go having laid the groundwork to enable them to go. And of course, as with all of these things, one has to pull off the swan float. The analogy of the swan swimming across the pond. It doesn't really matter what's going on underneath, but when you're in the meeting and when you're speaking to prospective investors or prospective counterparts in any market, that is the only place you want to be. And of course, everything else is running smoothly. And it, look, somewhat rarely for a lawyer. Let me put it to you this way. I think a lot of it is about the presentation and about the messaging and about the way in which it is all put across as much, if not more, than what it is that's actually being said.
Cool. That's very helpful. Tom, does that resonate with you? And do you see people where founders do come over and they've not got it sorted out back at home?
I concur entirely with James's thoughts, and not only that, but you need to have somebody in the United States that the Home Office back in the UK is going to listen to. We've seen so often companies send people, young pups, if you will, that are super keen on being in the United States and all that kind of stuff, but they don't have the attention, they don't have the clout that a founder or a senior executive of the UK company would have back home. People don't listen to junior people. They've got other jobs that they've got to attend to back home. And so often enough, things kind of run out through the sand in the United States, and everybody blames the person that was sent to the US, when often enough it's because the people back home were not listening to them. That's also a compelling reason to me why founders should think long and hard about sending someone other than themselves to the US. James is absolutely right. They have the passion, they have the clout, they have the standing with prospective business partners in the US.
I think you raise a very good point there, Tom and Roddy. If you don't mind me just,
yeah, please do.
The point is, even if the founder isn't going to want to live long term out in the US, part of the journey and part of the process needs to be for them to not just go out in the US, set it up in a blaze of glory, and then run back to wherever they've come from and just leave the US to wither under the tutelage of this very keen but potentially naive office. They need to make sure that there is someone there that has backing, that has gravitas, that has the seniority and the clout, as Tom said, that when they say something, it's listened to, and it's not just, it's whoever's out in the US saying it and, they're out on a limb. It's got to be this integrated process, and the person that kicks off that process has got to be the founder. But then it's almost like a succession issue as well. When the founder if the founder decides they wish to step back from the US, they have to, the same way that if they're going to hand over the reins of the business as a whole to someone, if they're going to hand over the reins of the US operation, there has to be, it can't be something that they just do like that. That's also got to be worked on.
That makes huge sense.
Roddy, if I may just like to add I totally agree with Tom and James about the founder coming, although you should know there could be dramatic tax impact. A founder, a shareholder of a UK business moving to the United States, becoming a US tax resident, will lose the benefits of any loss carried forward in the UK and may end up being taxable even if there is losses or past losses in the US. So that's a famous GILTI. The tax law came 2 years ago. So if a founder comes over, please do encourage them. Make sure you really do a tax simulation. Really don't just move and then call us. It can be pretty dramatic. Just wanted to add that bit.
Indeed. Well, I think there's the tax piece, but there's also takes us into costs of hiring. So typically the costs of hiring in the States versus UK. Antoine, is there is it like for like? Should we be surprised?
Well, I mean, the big surprise is really on salaries. One of my clients really tell me, we do our budgets and we look at what we should be paying people or what we think we should, and then multiply it by 2, and you're probably right there. I mean, that was post-COVID. Where is it today? Where would it be next month? I don't know. But when you look at, salaries, wages, like in San Francisco, Boston, I mean, it's just up the roof compared to what you see generally in Europe. As far as the services of recruiters, I can't really tell. My impression, it's not that different in terms of cost, but the big issue is the cost of wages and salaries and benefits.
Yeah, it's often a big step up.
Roddy, can I jump in on that one?
Please do, please do.
On the hiring side, organizations like GPAC or our colleagues in Virginia as well, we have a lot of tools that are available to actually do simulations on operations and cost analysis to run and hiring. So again, and those are all free, confidential. So, if someone were to really dig in and run tax analysis, like Antoine mentioned, absolute, and then an operational cost analysis on what the team could look like in the US to run it, give us a call. It's all free. You can have it anytime.
Perfect. Thanks very much. We've got a question in the sidebar about a couple of the crises looming, both the impact of Brexit, also kind of the US, China now, kind of UK, China potential trade wars, how that might blow up. I don't think we've got time to deal with those on this call, but maybe on Antoine, given COVID and the impact particularly on travel at the moment, are there things you're doing to support US market entry now that you weren't doing a little while ago?
Well, I mean, obviously we lean a lot more, on our network, and whether that's for insurance, whether that's for recruiting and all this for people. And we work with people specializing in working with foreign and especially European corporation, and we can do pretty much everything remotely. I mean, as of today, I mean, we know how to open a bank account in the US, or we have the connection to open a bank account in the US without you ever coming here. So we can do that. Recruiting can be done remotely. And as well, I mean, more towards what we do. I mean, we are going towards offering complete platforms from order entry to delivery, including payment system, integration with accounting system. So you can have a full blown integrated platform, and including people to pick up orders if needed. Obviously, most of it is automatized, but that would be included. So that's the services we are developing right now to really help companies face this issue of recruiting and dealing themselves with those items.
Yeah, it's really helpful when you can't get boots on the ground and your day is just not long enough because you're in a different time zone. It's and you've got to maintain momentum in that entry process. That's really helpful. I'm just going to whiz back through my panelists very quickly. I've got one question for each of you. By the time December comes around, who's going to be the next president? Trump, Biden, or West? Who's up? James, come on, you haven't got any skin in the game.
You're muted, James.
One thing I've learned from the past few months is that whatever we expect now, there is no way in which we're going to know what's going to be happening. We don't even know which one of the candidates it might possibly, not wishing them any ill, but might possibly have contracted COVID and what that might do to them. I mean, we all know that Trump has an incredibly strong constitution, so clearly he'll fight it off. But you know, were they in any other sphere of life, they'd probably all be in self-isolation and won't be allowed out until the 4th of August.
Indeed. Tom, you got a view?
I hope I'm not jinxing things, excuse my French, but I think Joe Biden will be the next president.
That's right. Antoine, do you share that?
Yes, I do.
Colin, do you have where's the smart money?
This is American politics, Roddy. There is no such thing as smart money.
Well,
that's a very good place to leave it. Thank you to Ian Tracy, thank you to all the panelists. Particularly thank you to WorldFirst for their sponsorship of this series of webinars. I hope it's been useful and valuable for you. There are a number of next steps. So to continue the conversation with any of our experts, you'll be sent an email shortly with details of how to contact us to do that. GTM Global will be contacting a number of the companies on this webinar to invite you to a virtual workshop chaired by Ian Tracy and with many of today's experts to further accelerate your investment opportunities and provide more depth on today's topics. If you want to find more about how a fractional international growth director could support your expansion plans, please see the fractional executive page on go-to-market.global or at boardroomadvisors.co.uk. Keep an eye open for more online events from GTM Global in the summer and early autumn. We've got webinars, virtual workshops and coming up, and we've even got a concierge service going to provide boots on the ground for internationalizing tech companies. That's both into the US through Antoine, and we're doing it for US companies coming into the UK. Lastly, this session has been recorded and will be available shortly on the go-to-market.global website. I think that concludes today's webinar. So thank you to everyone who joined us and to all those who participated with their expert content. Thanks very much, Mark. I think we're done.